Okay, I'm going to talk about some economic issues, and I'm going to try and relate that to the investment markets, some risk management, asset allocation, combining everything, right, to give you a sense of what's going on, to help you become a better investment manager, and hopefully I will also provide some value to the more experienced investors who are listening to this, some of the fund managers, some of the financial advisors, and so forth. So I'm going to talk about several things. Hopefully I won't be talking about trivial things. I'll be talking about the big issues, okay, the big topics. And most of these topics you've either heard about before, I've talked about in the past, or it's not going to surprise you, right? So what's the big topic right now? I'm going to give you a little quiz. What's the number one topic economically that you should be thinking about that's kind of an overhang of what's going on right now? You should maybe pause this for a second and think about it. Think about it for a few minutes. Actually, I should give you a multiple choice, right? If I give you a multiple choice, you're probably going to get it. If you have been a subscriber for at least a few months, you'll probably get it. So let's go ahead and talk about some of the big topics. I'll give you a multiple choice, and you can tell me what the number one thing is. Well, we've got earnings, right? Earnings, corporate earnings from U.S. companies. We've got China. That's a big risk as well, right? China. We've also got interest rates, right? Interest rates low, generally going lower. We've got deflation, right? Deflation in the EU, deflation recently in China, right? Deflationary forces in some of the other countries. So those are, I guess, four choices you've got there. Pretty tough, aren't they, right? Because all four are important. My answer, and your answer might be different. You might be right, I might be wrong, but I'm going to tell you the most important thing is deflation, right? That's the important thing we need to focus on. Why? Because that's driving everything right now. That's driving the strategy, the monetary policy. That's driving a lot of the politics, not only in Europe, but we're starting to see once again China. China is experiencing some very mild deflation. And that's before it's even deleveraged from its huge bubble. What's going to happen when China's bubble deflates? You're going to see some problems, right? So everything else is important. Corporate earnings remain strong, right? But they are weakening. We've talked about this period of gradual weakness. I've been warning everyone about it in the market forecasting section for the past several months. Why? Because I've been saying that, hey, these geopolitical issues, the global weakness, the deflationary forces that are rising, ultimately they're going to add up. They're going to accumulate, and they're going to adversely impact earnings of U.S. corporations, right? Many of America's largest corporations obtain a large proportion, the majority of their earnings, and also even earnings growth from the rest of the world, right? So that's important, okay? Now, in the past, you've gotten all these people out there who want to make you give you a knee-jerk reaction, talk about this and that, and, you know, I guess a good example is that when they talk about all the problems in Syria, look at the oil and all this stuff. That's a bunch of baloney. I've written all that stuff off. Cyprus, Turkey, even Russia. I've talked about how that's a bunch of baloney. Don't go for the hype. You even had people talk about Ebola virus. You know, the market's going to sell off. I mean, this is why I'm saying stay away from the media. It's a bunch of jugheads, a bunch of idiots, okay? But I've been talking about over the past few months how eventually we're going to see a weakness in earnings. Why? Well, because we've got record high earnings, record profitability, we've got record low interest rates. You know, you've got these extremes, right? Where can you go? What's the next direction? Well, the next direction is down, right? Profitability is going to trend down a little bit. I don't think it's going to happen anytime real soon. I think it could happen in a trend, as far as a trend basis, maybe it won't happen for a couple of years or more, but we could start to see some, pretty soon here because of the downside in oil. We've got, of course, record low interest rates, and rates are going to increase. I've talked about this over the past several months. I've mentioned that I think that even before the past several months, I've been focusing more towards the latter part of 2015 as seeing an interest rate increase. And then once the officials in Europe finally woke up and realized the obvious, that is the deflation in Europe, the deflationary forces, and they, of course, instituted lower interest rates, slapped down rates, talked about asset purchases. These are issues that I warned about. I recommended a collapse in interest rates, a deep cut in 2011. Talked about it actually in late 2010. They didn't listen, of course, because they're clueless in Europe. The guys running the show, the ECB, the European Commission, they're all clueless. They're a bunch of jugheads. They're even worse than the officials in the U.S. So anyway, we talked about all those things, and this is what we're seeing now, right? I'm not going to cover the market forecasting in this presentation. I talked about that separately. But the bottom line is that, once again, we did predict the sell-off. We called it a volatility retracement. It's been enhanced somewhat by the irrationality, the panic selling because of the situation in the Middle East. Right now, deflation. This is the problem. This is a problem. And of course, deflation is the characteristic of a depression, right? That's a typical characteristic of a depression. I talked about that in America's Financial Apocalypse, right? I talked about periods of inflation and deflation. And we've seen somewhat that a little bit. We saw that rapid rise in inflation in 2008. Then we saw commodities bubble pop in fall of 2008, late summer. And of course, we saw the bubble reflate due to the global economic stimulus that was passed in 2009. That carried us all the way through to 2011, mid-2011. And that's when I talked about problems in the emerging markets, specifically in Brazil. And of course, India had some problems here and there. And then finally, China gave way about a year and a half ago. For the most part, India, of course, has been doing quite well. I talked about that in the emerging markets forecast. I'm not going to get into that now. But I wanted to mention, first of all, I wrote several years ago, I don't know, 2008, 2009, maybe 2010. I wrote about this. I can't recall if it was in the research or in an article, but I basically wrote about how OPEC had all the power. And I talked about how over the past several years, OPEC had not been increasing its production to meet market demand. And therefore, the non-OPEC producers were actually responsible for more crude production than the OPEC producers, right? And I stated that basically I thought that OPEC was doing this on purpose. It was gradually withholding from the market in order to give more opportunity for the non-OPEC members to build up, invest, and so forth, and basically meet market demand. And I mentioned that they were doing this on purpose because it was causing the non-OPEC nations to do two things. They were causing a higher price in crude because, of course, the expense is much higher for unconventional oil, which is what most of the non-OPEC producers produce to a variable degree. And the second impact was that it was causing them to deplete their reserves and making OPEC actually a little stronger. Now, since that time, we saw the boom in the shale oil industry, right? When I wrote that article, the shale was really kind of in the immature stages, and it kind of took everybody by surprise in terms of the amount of capital, the investment capital, and the amount of production, and the continuing finds that they had over the past few years, right? And that even trickled down to Latin America. You know, Latin America's got a lot of shale oil they're waiting to harness, right? A lot of their finds, Argentina, Brazil, other places, China as well. It's a big shale reserves. So I think what we're looking at now, it's a little bit different situation. Of course, you have a lot of investment in the unconventional, specifically the shale corporations. As a matter of fact, about 2 or 3 years ago, when there was a problem with the shale, I believe it was maybe around, I can't recall, but oil went down, I think maybe after the tsunami or something. I can't recall what it was, but there was a stressful period, sometime in maybe 2012. You can look it up. Stressful period for oil. I think it was maybe early 2012. I can recall making a research call And I basically said there was going to be a lot of industry consolidation with a lot of these MLPs, Master Limited Partnerships, the Shell oil companies. There's going to be a lot of consolidation. We didn't see it at that point. Well, we're going to see it now. And the reason why I called for the consolidation is because I knew that, hey, oil prices determine what's going on. These guys have a very high cost of production. Okay? And it varies. It varies depending upon the company, the geographical location. It varies. There's many different variables. And I'm not going to get into the cost of production because it's so variable. But, it's certainly not $80 like some numbskulls are saying. I mean, they just don't know what the hell they're talking about. I would say average, I'm not going to go into the variable aspects, but average is around 50 to 60. Okay, somewhere around there. There's some that are lower. There's some that are a little higher. Okay. Now, of course, the Canadian oil sands is on the higher end of that for the most part, especially when you're talking about the refinement process because it's very, very expensive to refine. Now, some Canadian oil is lower, but for the most part, you should think about the Shell oil, let's say, $50 to $60. Okay. Now, of course, as I wrote about several years ago, much of the Saudi oil, including even, of course, the Saudis are not Iraqis, but a lot of Iraq's oil, Saudi oil, we're talking about a cost per barrel of, less than $5, depending upon where the location. And I would say the vast majority is under $10. So that's pretty powerful. And so the question becomes, what are the Saudis doing? Are they trying to bankrupt a lot of these oil companies? Is that what they're trying to do? I don't think so. It doesn't really bode in their favor to do so. I think what they're really trying to do is to gain a foothold on some geopolitical leverage. Okay, I think that's basically what they're trying to do. But anyway, none of that really matters. Trying to read the mind of people that I can never understand what they're doing unless they come out and tell me and they're honest with me. It doesn't really matter. All that really matters is looking at the situation, the perspective, right? And what the situation is, of course, you've been hearing about how low oil prices, why it's good. It's good for consumers. Consumers are going to go out and spend more now, right? They're going to have more money in their pocket. I've even heard some numbskull talking about the consumers are getting $1 trillion stimulus globally. Of course, that assumes that oil prices are low. They're 60, $70 for a year, right? It's a big assumption to make. And it doesn't work that way anyway. It's more of a psychological issue. But the point is that you're not going to see, other than the boost to confidence, the psychological issue, which is typically short term, other than that, you're not going to see a boost in consumer spending with low oil prices, unless oil prices are low for at least 6 to 8 months, which I think that is what we're going to see. I think it's going to be in excess of a year. Now, how low oil prices go, who knows? As I mentioned in previous presentations, no one can tell. This is oil. This is a lot of speculation going on. At any point in time, the Saudis can come out tomorrow and talk about halting their production or cutting their production, and you watch oil take off. You watch it soar, right? Or there could be something else to slap it down more. So there's a lot of speculation. It is oversold. It's overdone. It's certainly underpriced. There's no doubt about it. But you don't want to mess with it. You don't want to short the oil unless you're on, you're a very active situation. This is why I haven't recommended shorting oil, by the way, because for the subscribers, we have once a month issue. Now, I have call-in clients that call in with live calls for trading guidance, and of course, any of you are welcome to do that. You can look for more information on how much that costs in the middle of the website. But for those clients, I've actually recommended shorting, and I've helped short oil all the way down. But I'm not going to talk about that in a monthly publication because at any point in time, you can see a whipsaw. And oil can rally very strong because it is underpriced. So I just want to give you that perspective. Now, the other point is that it's clearly irrational because why? Because there hasn't really been any news. What has caused oil to come down all of a sudden, right? What, all of a sudden the acknowledgement that Europe's in a deflation? There's a slowdown? This is not news. This is not news. Now, as you'll also recall in the commodities section of the Intelligent Investor, for several months, I was pushing investors away from those upside trades. I was being very cautious on the downside. Why? I didn't want to get you stuck in oil because I thought it was being manipulated to the upside with all this stuff in Syria and what have you. It was a bunch of baloney. I can recall, I guess it was, I don't know, June maybe or so. You can look up the chart. Oil, and I'm not even actually at the computer. This is on audio. I'm walking around. But, oil was over $110 in the summer. Was it not? WTI, right? And now it's down, what, 40%? 45%? Do the math. It's $58 or something like that. Well, what happened? I mean, did the fundamentals justify the collapse? Of course not. In part, it was excessive, right? The price was excessive in the summer. And of course, that was driven up by all this speculation. But this stuff is typical. You got to understand how to play it, right? Now, what's going on with oil now? These are little things with Russia and Turkey and Cyprus and Syria and Libya and Iran and Iraq and this and that. Of course, it's going to boost oil, but it's short term. But when you're talking about the decline in oil now, it's more legitimate. Why? Because it's based upon the reduced demand. But that's not news. We've been talking about the slowdown in the global economy, the deflation, for quite some time now. This is an example, though, that shows you a learning point in that, and I've talked about this before. Forecasting and acting upon those forecasts, making money, they're two different things. Why? Because I can know what's going on exactly around the world. But at the end of the day, it's the people. The investors control market prices, don't they? Right? So we have to also keep aware of what the sheep are thinking, the people behind the curve, because they determine asset prices. And this is a perfect example here of the delayed response, not only with the ECB and the officials in Europe just recognizing their deflationary period in May of 2014, which was clearly prior to that, many months prior to that, but also the situation with oil, right? It's another example of you not just knowing what is going on is kind of a risk management aspect, right? Understanding what the investors are thinking, what they're aware of, that is more how you make the money. Okay? So I want to point that out. It's something I've never heard anybody ever talk about, but it's very important. And of course, if you don't know what's going on, then you can't even address the more advanced issue of understanding what the sheep are thinking, right? So I'm sure I'll talk about this more in the future because it happens all the time. But I just wanted to mention that issue in terms of OPEC and what's going on. And the fact is that oil is finally catching up with the overall weakness in the global economy. It's catching up with the overall deflation in the commodities bubble, which I predicted that in the February of 2011 to begin all the way down to as low as 450, and even with the big blowout could be 400 or maybe even 350. We'll just have to see. So I've telegraphed all that, and so this is no surprise. Now, there have been commodities that have been up and down and so forth. You've seen some of the ags go up and down. Wheat's had its issues. Corn's had its issues. Coffee, you name it. But for the most part, these things have trended down, right? Except for the meats, right? The cattle, live cattle, feed cattle, hogs, and to some extent milk, right? Those have been pretty bullish. Now, we also had later periods whereby it took a while for lumber, let's say, and orange juice to collapse, right? But for the most part, the meats have been strong. And I talked about this relative to Australia, what this means for Australia. When the cattle collapse, talked about that last time in last month's issue. But we're seeing now, it's not a confirmed, but it's pretty clear we're seeing maybe the beginning of the fall down in the cattle, right? We already saw the milk collapse, which I predicted. I was warning about that in the commodities section for several months. That's why I recommended, taking that trade, the bullish trade, but use trailing stop losses because I was expecting a big sell-off at any time, and that's what's exactly what happened. I think we're going to see it in the cattle as well, okay? So the point is that oil is just kind of following that trend, right? Oil, it shouldn't be shocking. It's a little surprising to see oil come down this quickly over no news, but if you keep in mind how the commodities markets work, if you keep in mind the fact that oil probably fairly priced should be around $80, WTI that is. It's probably the fair value of oil. If you keep in mind all these things, then it shouldn't be that surprising that oil is where it is now, and it could go much lower. There's no bottom to where oil could go in the short term. I can tell you that right now. But I can also tell you that oil is underpriced right now for the longer term, without a doubt. And also, one other thing is that oil very rarely trades for its fair price. And I think that its fair price is $80. In 2015, the fair price could even go down to 75. That doesn't matter. Oil doesn't trade based upon the fair price. It trades based upon the perceived fair price, right? Or perceived opportunities, what the traders think. The one other thing I want to talk about with oil, and I'll probably show you this when I get on the video and talk a little more, but obviously, I mentioned this earlier about the impact of low oil prices on consumption, on consumers, right? It's a boost. Only if oil stays low for an extended period, which I think it's going to be, right? I think it's going to be at least a year. And low doesn't mean it has to stay in the 50s or in the 60s, right? Or in the 70s. Anything, I think, below 85. But the point is that the most important impact of oil, these low oil prices, is the adverse impact on the S&P 500 earnings. This is the problem because the earnings have been slashed by more than 20%. This is the biggest reduction in profitability in the oil companies, S&P oil companies, since 2009, first quarter 2009. So this is important. This is a big thing, right? Because it's going to bring down the valuation for the S&P 500, right? That's important. That's the impact. That's what we got to look at. And that's why it's important to look at this reduced demand, this global deflationary presence it's not substantial, but it's growing. And in Europe, I talked about the deflation in Europe. I wrote that article, The Deflationary Future of Europe. I wrote that in February 2011. I presented a pretty strong case for a long period of deflation in Europe. We're seeing some deflation in China. Also we've got the problem in Japan. Talked about Japan last time, right? Talked about the stupidity in the move to raise the VAT in Japan. In a nation where people are frugal, Asians are generally very frugal. They save a lot of money. They don't typically spend a lot of credit unless they come to America and become indoctrinated into this toxic system. But you're also talking about the Japanese who are very, very frugal based upon the deflationary situation there. Last thing you want to do is boost the consumption tax. Boost the incentive to not spend. And the Prime Minister there, Abe, on November 14th, Prime Minister Abe came out and had a press conference, and he announced that they would suspend the next VAT increase. And that's supposed to be, previously I said it was 1% due in October 2015. It's actually 2% higher. So they're going from 5% to 8%. And then October 2015 was supposed to raise it 2%. He had the option to, and it was planned to raise it. But he came out with this press conference, and he basically said they're going to delay that for 18 months. And he dissolved the lower parliament and called for a snap election on December 14th, right, which is a day. And this is basically to see if he has the confidence of the voters. He wants to get reelected. He wants to see if the voters are with him or they're not with him. And this is kind of a smart move. You'd never see this, of course, in America, because these politicians are all just shameless whores and scumbags. But he's basically saying, listen, if you people are with me, you're going to vote for me, you're going to help this VAT increase work for us, right? And he basically came out and asked for the confidence and the support of the Japanese people. Because, of course, ultimately, they're the ones that are going to they're going to decide whether or not this restructuring is going to work, right? And it's not the final phase of the restructuring. It's only the second phase. There's many more issues, more problematic, I think, are going to come into play. Now, before I continue, I want to just mention something that I'm not sure if I've mentioned before, but I know I've talked about the general topic, and that is, of course, those of you who've been following me for a while, you know that I'm not impressed with the so-called progress or so-called recovery in the U.S. I think it's largely a farce, and the reason why the markets, the capital markets, continue to do well is because they're not really a barometer of the health of the U.S. economy anymore. There is a depression in America, just as I predicted. There's no doubt about it. And of course, there's not really been much progress in terms of the working class American, right? Middle class American. And I just want to point this out because, I mentioned the structural issues in the U.S. I mentioned the more problematic structural issues in Europe and Japan. I've talked about this for several years now, but I try not to harp on it because where our focus is making money. This is investment research. This is not a political bandwagon. I'm not here to run for office and to garner popularity, right? I'm not here to talk about Paris Hilton or Kim Kardashian trivial financial topics. We're here to make money. So I don't obsess over the economic issues in the U.S. because at some point in time, you got to push that aside and focus on making money, okay? But the point is that you hear about structural reform, right? That's kind of the buzz phrase that's been going on. I just wanted to mention that basically means depression. Just like in Europe, they don't want to use the D word, the deflationary word, right? Before, nobody wanted to use the depression word, which is one of the numerous reasons why I got banned. No publisher would touch my book. I had to learn how to self-publish before Amazon had their create space, their publishing. I actually became a publisher. I'm a legit publisher. Anyone wants to publish a book through me, have me publish a book, contact me. I had to learn all that because my book had depression in the title. That's one reason. There's numerous reasons. I've gone over the past. I'll talk about it in the future. But, of course, you heard the depression word came out a few times later on. Now the word to avoid is deflation. They don't want to talk about deflation, right? So they'll talk about disinflation, they'll call it, which is not accurate. The point is that the structural reform buzz phrase that you're hearing, that's another way of saying depression, you see? Because when you have a problem with the foundation of your economy, there are structural issues. It's not a cyclical issue. Cyclical issues to the business cycle, that's a recession, economic expansion, contraction, right? Recession, boom, right? Economic contraction, economic expansion. That's through the business cycle. It's normal. But when you have structural problems, that means that it's not cyclical. You have things that are not a reflection of the business cycle. And that's what the establishment won't tell you. All these structural issues that they're trying to resolve, they're trying to resolve the global depression. That's what we are in. Now, I don't want to give any fuel to these gold bug doomsday morons out there. That's the risk that I face when I even talk about these things because we live in a world of extremes. People want to hear night and day, black and white, and they run with it, right? We have issues. I've talked about those issues. I could argue I'm the leading person in the world. If you want to talk about what's going on, I'm the guy. I've got the track record, right? I'm the only guy in the world that was bearish and presented a case for a depression in America. And I became bullish on the stock market at the exact bottom. Nobody else in the world even came close to that. There's not many people in the world that even talk about a depression. You even got the doomsday gold-pumping con men who claim to have predicted the financial crisis, right? Which they didn't. But most people think they did because the media tells you that they did. These guys didn't predict a depression. They didn't tell you to short the stocks, the banking stocks, Fannie and Freddie in their books, right? They were just marketing bullshit. That's what they do. Even they're talking about a depression now, right? Anyway, the point is that I just want to mention that about the structural issues. You got to keep that in mind. But at the same time, you can't fixate on that. We have to fixate on what we can do and where things are going. That's why forecasting is a dynamic process, okay? You don't just put something down and that's it. I am constantly reassessing things on a daily basis. Fortunately, I've established a way to come out with a forecast every month and have it pretty accurate. And then that's based upon the assumption algorithm that I use, which is not even, I don't even think I could explain it if I wanted to. But anyway, the point is that I'm constantly refining these things, and I want you to keep in mind that the most important thing is that you're not going to see huge change overnight, okay? The change is out there. It's usually pretty gradual. It's just that the media focuses on it, makes you think that there's a huge problem. And the case in point in that is with the recent collapse in oil prices. They would have you believe that you know, the sky is falling, and it's not, okay? It's not as if these issues became problematic overnight. It's just that the herd mentality caught on, and it's kind of a piling in situation. Anyway, so let me just go on now. You know, talked about how Brazil has been in a free fall. They entered a recession. Of course, recently they talked about how they're out of the recession. They reported a 0.1% GDP expansion, right, for the most recent quarter. You know, if you believe that, then, you know, I've got some beachfront property to sell you in Dallas, Texas for a very good price. I don't care if they're in an official recession or not. You just look at the economy. It's not good. The positive thing about Brazil is that at least Rousseff has realized she's got to change her strategy. And as I forecast this actually several months ago, I said that Brazil's interest rates were going to head to 12% and higher in 2015. Of course, they raised rates, which shocked every single Brazilian economist because it wasn't consistent with Rousseff's philosophy. And I think that now they see that rates are going to go higher. It's the only thing they can do. So now rates are 11.75%.
There are two fundamental reforms that we need is to get adequate capital, and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't.
So things went very well, and then the economy collapses, and so all of a sudden people are saying, well, it was Alan Greenspan's fault because he should have anticipated this. Did you think that was fair?
Nobody forecast the 2008 crisis. One of the things I put in the second book I wrote was how the IMF missed it, the Federal Reserve missed it. You go down a whole series of the major forecasting.
Well, everybody got it wrong, let's say.
You can't have a crisis of that nature that is not a surprise. Nobody forecast the 2008 crisis. One of the things I put in the second book I wrote was how the IMF missed it, the Federal Reserve missed it. You go down a whole series of the major forecasting.
Well, everybody got it wrong, let's say.
You can't have a crisis of that nature that is not a surprise. Nobody forecast the 2008 crisis. Nobody forecast the 2008 crisis. Nobody forecast the 2008 crisis. There are two fundamental reforms that we need is to get adequate capital, and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. Certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. Certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. There are two fundamental reforms that we need is to get adequate capital, and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new. Things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. Nobody forecast the 2008 crisis. Things were being done which were certainly illegal and clearly criminal in certain cases, which nobody forecast the 2008 crisis. 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 Nobody forecast the 2008 crisis.
terms of getting back as an investor, if it's coming down to here, almost irrespective of what's going on, I have to believe. If I have to make a call in advance, and of course I can change depending on what happens, but I have to believe this is where you want to start doing that 18, 17, around there. Their earnings report is a complete game changer, at least for quite a while. Bottom line, NVIDIA now is going to enter the realm of Tesla, Apple, and all these other big, I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works. I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works.